Burkina Faso has taken a significant and bold step in reclaiming control of its natural resources by nationalizing two major gold mines, Bungu and Wagnion. This unexpected decision has created ripples across the global mining industry and financial markets, as the mines were previously under the ownership of London-listed Endeavour Mining and sold to Lilium Mining for over $300 million. However, in an unexpected shift, the Burkinabe government negotiated a deal to take over these assets for only $80 million. Along with this, they secured a 3% royalty on up to 400,000 ounces of gold from the Wagnion mine, an arrangement valued at approximately $20 million. This strategic move reflects Burkina Faso's evolving approach to managing its natural wealth and poses critical questions about how it will impact the global gold market in the years ahead. The idea of nationalizing key industries, particularly those related to energy and minerals, is not new on the global stage. Countries have historically moved towards nationalization to gain greater control over their economic futures, secure more substantial revenues, and protect national interests. For Burkina Faso, this decision mirrors a wider trend of resource nationalism that has been steadily growing across the African continent. Governments across the region have been increasingly reclaiming control of their natural resources from foreign multinationals in a bid to secure more localized benefits from the wealth that these resources generate. The Bungu and Wagnion gold mines are not just regular assets. They are among the most productive and valuable gold mining operations in Burkina Faso. Bungu, in particular, has played a critical role in the country's gold production and has significantly contributed to the national economy, notably boosting the country's GDP. By taking ownership of these mines, the Burkinabe government aims to keep a greater portion of the profits within its borders, ensuring that foreign corporations no longer monopolize the benefits from its natural resources. This move isn't just a short-term financial windfall for the country. It represents a broader goal of ensuring long-term economic growth, self-reliance, and the ability to control the terms of its own development without heavy reliance on foreign entities. The implications of this move extend beyond Burkina Faso's national economy. There are immediate repercussions for the global gold market. Gold has long been considered a safe investment during times of economic uncertainty, and any shift in the global supply chain can significantly impact prices. With Burkina Faso taking control of two major gold mines, this shift introduces new uncertainties into the global gold market. Investors and financial analysts are paying close attention, particularly regarding the risks of geopolitical instability. There is now concern that disruptions in production could lead to a tightening in global gold supply, potentially driving prices higher as the supply becomes more constrained. A key challenge that Burkina Faso faces is whether it can maintain the same production levels that were achieved under private foreign ownership. In cases of nationalization, there are often concerns about efficiency and operational continuity. If the government struggles to maintain consistent production, the global gold market could experience shortages in supply, leading to fluctuating prices. Investors who are already cautious about geopolitical risks may respond by increasing gold prices further, as they seek to hedge against these potential disruptions. While the immediate effects of this nationalization are centered around global gold prices, the long-term impact could be much more transformative. If Burkina Faso is able to manage these gold mines effectively and sustain or even exceed previous production levels, it could set a powerful example for other resource-rich nations in Africa. The message would be clear. African countries can reclaim control over their natural resources and manage them efficiently without relying on foreign corporations. This could spark a broader movement across the continent, with other nations looking to follow in Burkina Faso's footsteps by nationalizing key industries and retaining more of the wealth generated from their natural assets. If Burkina Faso's nationalization efforts prove to be a success, it may inspire other countries in Africa to reconsider their relationships with foreign multinationals. In many cases, foreign companies have extracted vast amounts of wealth from African nations while providing little in return. This realization has led to a growing desire among African governments to take more direct control of their resources and secure greater economic sovereignty. Nationalization of natural resources could become a model for achieving this goal, allowing countries to retain more of the wealth generated from their own lands and putting them on a path toward economic independence. In the longer term, this could have a significant impact on global trade patterns and supply chains, particularly in the gold industry. Africa holds some of the largest gold reserves in the world, and any substantial shift in how these resources are managed could reshape the global gold market. If more African nations follow suit and take control of their gold production and distribution, they could gain a more prominent and influential role in the global economy. This shift could also foster greater regional cooperation among African countries, enabling them to strengthen their collective bargaining power in the international marketplace and challenge the dominance of foreign players. The geopolitical ramifications of Burkina Faso's nationalization move are equally noteworthy. Gold is not just a commodity, it is a highly strategic asset that plays a crucial role in global finance and trade. Countries that hold substantial gold reserves possess considerable economic power, and any changes in the control of gold production can have far-reaching consequences for global economic stability. Burkina Faso's decision to take control of its gold mines is a powerful statement of economic independence. It positions the country as a serious player on the global stage and signals its intent to chart its own course in the future of its economy. This newfound control over its gold reserves could give Burkina Faso additional leverage in international forums and negotiations. Within organizations like the African Union and other regional bodies, the country could use its increased economic strength to play a more influential role. Other major gold-producing nations will undoubtedly be watching closely to see how Burkina Faso's nationalization strategy unfolds. If it proves successful, it could prompt similar actions in other parts of the world, leading to a reassessment of global gold reserves and their ownership. The global reconfiguration of gold reserves would have profound implications for trade balances, currency stability, and international relations. Countries with substantial gold reserves would find themselves in a much stronger economic position, while those with limited access to gold might struggle to compete. This could lead to heightened competition between nations as they vie to secure access to gold and other valuable resources. In conclusion, Burkina Faso's decision to nationalize the Bungu and Wagnion gold mines marks a pivotal moment in the global gold market. While the immediate focus is on the potential disruptions in gold supply and the associated geopolitical risks, the long-term consequences could be far-reaching and transformative. This move could usher in a new era in which African nations take greater control of their natural resources, challenging the long-standing dominance of foreign multinational corporations in the mining sector. If Burkina Faso succeeds in its strategy, it could lead to a restructuring of the global gold supply chain and a shift in the balance of power within the global economy. As the world watches how Burkina Faso manages its newly nationalized assets, there is no doubt that this moment represents a critical turning point not only for the country, but for Africa as a whole. Many countries across the continent are striving to assert their independence and shape their own economic futures. The outcome of Burkina Faso's nationalization efforts will likely serve as a key indicator of the future direction of resource management across Africa. For those who have followed this insightful analysis, don't forget to like, comment, and subscribe to stay updated on more geopolitical developments. Thank you for tuning in, and stay curious.